Good morning, traders, and welcome to BCI's morning market outlook. First up, let's have a look at the US dollar. The DXY has slipped to around 100.36 after a weaker than expected US producer price index reinforced signs of easing inflation. That was followed by, of course, softer CPI figures earlier in the week. Markets have since reduced expectations for a September Fed rate hike to around 49%, although rising oil prices and escalating tensions in the Middle East continue to pose upside risks to inflation. Um, Technically, the dollar remains in a consolidation phase. Resistance is seen around 100.1 and 100.57, while support sits at 100.36, followed by the key psychological level of 100. Next up, let's have a look at the big boy WTI. Crude oil prices are trading around 79.6 after touching a 1 month high as renewed US action against Iran and fresh attacks on oil tankers reignited concerns over supply disruptions to the Strait. The US's proposed transit fees have eased. Geopolitical tensions continue to dominate sentiment, with traders also watching the EIA inventory data for further direction. Technically, $80 remains the key resistance zone, with a break opening the way up to about 85.75. On the downside, initial support is seen around 77.69, followed by the 5 day moving average around 75.9. Next up, let's have a look at gold. Gold is trading around 4,060 after rebounding on weaker US inflation data, which weighed on the dollar and reduced expectations for further near term Fed tightening. Rising oil prices and escalating US Iran tensions continue to create uncertainty around the inflation outlook, keeping gold caught between competing macro drivers. Technically, gold remains below the 20-day moving average at 4,091, with resistance seen around the psychological level of $4,100. On the downside, key support is seen around $4,000, followed by 3,983, with a break lower maybe exposing the $3,941 level. Lastly, let's have a look at the Australian dollar, which has climbed above 70 cents, which is its highest level in 3 weeks, supported by a weaker US dollar as softer inflation data reduced expectations for further Fed tightening. Markets also looked past renewed US Iran tensions, while RBA rate hike expectations remain modest, with around a 20% chance of an August hike and a 60% chance by December. Technically, the pair is still holding above the key psychological level of 70 cents, but still faces resistance from the 50 and 100-day moving averages at 70.57 and 70.63. Above that, 71 cents is the next key resistance level, while support remains around the psychological level of 69 cents, followed by the 200-day moving average at 68.76.